Elon Musk is going to step down as the chairman of Tesla. That March 18th, Tesla stock is about 360. You can't value Tesla based on a conventional car sales model, car manufacturer model, such as Honda or Toyota. Right? Tesla is more like a science and technology firm with lots of experiments, lots of ideas. I see a lot of friends, clients, buddies saying, should I buy Tesla? What's up guys, welcome back to Money So Tasty. Let's all get a taste of capital. Today we'll talk about responsible investing. Never thought you have to be responsible when it comes to investing as well. If you're not being responsible, how can you get a good return? We'll look at some of the consequences of not doing responsible investing. We'll look at 3 companies or 3 stocks: British Petroleum, BP, Volkswagen, and Tesla, which is a very popular stock right now. Well, I shouldn't say right now, very popular for the last couple of years. At the end of this video, we'll also review to you the current situation for responsible investing, both in Canada and globally. How much out of the total assets under management are responsibly managed assets? If this is your first time to our channel, this channel is all about sharing on your journey to financial freedom. What are the money-making or investing mindset you need to have? And what are the common pitfalls that you want to avoid? If you want to grow financially free with us naturally, then make sure you subscribe to this channel, give this video a thumbs up, and open your little notifications so you will never miss another pie in the sky. Okay, so what is responsible investing, RI, sometimes known as socially responsible investing, or SRI? In simple terms, it's just about investing for a better future, investing for a better world. So usually some of the principles we follow are called ESG. E means environmental, S means social, and G means governance. So when we look at investment, we need to think about, is it going to create a better scenario for the environment, socially, or in terms of governance? Now, some of the common topics relating to environments usually are climate change, resource depletion, such as fossil fuel, water management and pollution, and deforestation. Some of the common topics relating to social is usually about community. We're talking about the smaller community near you or the larger community. We're talking about public safety, health, transportation, etc. And lastly, governance. We're talking about follow all those standards. We talk about certain accounting standards and asset management standards in our CFA topics. So it includes those, as well as how do you make sure you're being transparent as a company, you're sharing the information with investors, you're not lying to them, and also corruptions. And lastly, the number 1 topic ranked among ESG and responsible investing is cyber security. Now, what does this mean? It means as an investor, when we look for certain companies or stocks or certain investment options, we look beyond the financial factors. So how much return does it get me? The profitability, the growth, the stability of the company. We look past those financial factors. We look at certain non-financial factors. How would this affect the ESG factors we have been talking about? Is this going to create a better world? Now, why do we do that? Number 1, this is to making sure we're understanding the true return and true risk. Because we're going to look at, if you don't look at those ESG factors, if you're not being responsible when it comes to investing, there's some serious consequences out there, which we'll take a look later on. Now, the second reason why we probably want to do responsible investing is to satisfy some of the higher needs of human beings. Now, you've probably seen those needs pyramids, right? We have the basic needs, food and shelter, etc. But we also have some of the higher forms of needs, such as self-actualization, such as helping others, such as achieving certain things. Now, responsible investing is usually more purposeful or goal-oriented. You want to invest to achieve certain things, such as you want a certain industry to thrive. For some people, that might be to preserve the oceans. They want to see the deep blue sea not being affected by any of the pollutions. For some other people, they might want to achieve certain things such as eliminate certain diseases. So for them, by investing, not only they're getting a good return by understanding the true return and true risk, they're also achieving something else that's aligning with their values and their goals for the future to create that better world. Now, for individual investors, that simply means when we look at stocks or mutual funds, we look past just the financial factors. We take a look at, are those companies aligning with those ESG standards? Or at the very least, they're not contributing negatively to those ESG factors. Now, when it comes to institutional investing, it usually means when we're picking out, for example, our company, when we're picking out investment partners, investment teams, or investment companies, we look if they're including their ESG factors as well as responsible investing in their investment mandates or criteria. In this way, when we're creating our portfolios, we know those portfolios are following the responsible investing principles. Okay, now let's talk about if we don't do responsible investing, what are some of the serious consequences? We'll talk about 3 companies or 3 stocks: Volkswagen, British Petroleum, and Tesla, which is very popular nowadays and has been for quite some time. Okay, first we'll talk about British Petroleum, BP. Back in 2010, I'm not sure if you fellows still remember what happened to British Petroleum. So about 10 years ago, at 2010, British Petroleum did a huge oil spill in the Gulf of Mexico. To the point you can probably see black oils floating on top of ocean. It was really a bad scene. Now, from an environmental standpoint, obviously this is not good. But for the investors, from an investor standpoint, why is it bad for us? Why does it hurt our returns? Let's take a look. British Petroleum paid the largest environmental fine in US history. When you hear the size of this fine, you probably won't feel bad about yourself or any of the past parking tickets or any other fines you probably got in the past. British Petroleum paid $20.8 billion to the US government. Think about how much cash, how much profit or revenue British Petroleum needs to generate in order to pay that fine. So it definitely hurts the company's value. So why did British Petroleum pay to the US government? Well, number one, US government is really good at using laws to sue companies and get what they want. And number two, Gulf of Mexico is pretty close to some of the US states, for example, Florida, and really hurts some of the businesses and environments up there. For example, the fishing business, right? It's hugely affected by that. So after paying the fine, what do you think happens to the stock of British Petroleum? What do you think happens to the investors of those stocks of British Petroleum? The stock price dropped from 640 per share all the way down to 320 per share. So that's a 50% haircut. Now, over the years from 2010 to 2019, 2020, almost 9 to 10 years, it slowly climbs back to over 600 per share. And then what happens? It comes to this COVID-19 and demand and supply shock of this oil crisis. So now it's dropped back to the 300s, which means if an investor invested in British Petroleum after the incident for the last 10 years, he wouldn't have made any money. If he invested before the 2010 oil spill incident, then he basically took a 50% haircut. So that is a really serious consequence for investors if you're not being environmentally responsible and just in general, you're not doing responsible investing. Okay, now second company we'll take a look at is Volkswagen. Now back in 2014, Volkswagen had a huge emission scandal. Basically, Volkswagen thought, I need to sell more cars, so I'm going to put a little software in those cars so I could pass US emission tests. See, again, it's United States. I could pass certain emission tests. And later, obviously, this was found out, and that had a huge impact on the company's stock price. The stock price dropped from $250 per share roughly to about $100 per share. So that's an over 60% drop, even more than the British Petroleum case. Now, it has never since come back to over the 200 mark. So right now it's probably around 130, 140 per share. Again, a huge impact for the investors if you're not doing responsible investing. Now, the third company, or the third stock we're going to talk about, is Tesla. Now, Tesla has been very popular lately, and very popular pretty much for the last couple of years. You can see huge volatility for these stocks. And the reason being is you can't value Tesla based on a conventional car sales model, car manufacturer model, such as Honda or Toyota. Right? Tesla is more like a science and technology firm with lots of experiments, lots of ideas. So the valuation metrics is very different. But did you know back in 2018 what happened to Tesla? The Securities Exchange Commission, SEC, filed lawsuit against Elon Musk and Tesla for fraud. It all started with a Twitter by Elon Musk. Now, in that Twitter, Elon Musk shared he's considering taking the company, Tesla, private at $420 per share, $420 per share. Funding secured. I think that was the original terms used. Funding secured. Now, at that time, Tesla stock was roughly about $360, $370 per share. So this was huge to the stock market. So people started to buy in Tesla and the price started to go up to all the way, I think, near around $400 per share. Why did it not go all the way to $420 per share? Well, because most investors think it's just a Twitter, right? So it could be real, it could be wrong. So they still left a $20 room just in case it's not 100% settled. So what happened in the end? Not much, right? We know Tesla is still publicly traded, so it wasn't being taken private. So SEC said, no, this is basically manipulating the market. You're saying you're taking it private, funding secured, but nothing happened in the end, so we're gonna file a suit against Elon Musk and Tesla. Now, Elon Musk and Tesla did not say it's a fraud, did not say it's not a fraud, but they decided to settle in the end. And what's the result of the settlement? Well, first, Elon Musk and Tesla is going to each pay a $20 million fine. Now, $20 million fine is not huge for Elon Musk or Tesla, right? But it's a punishment. Now, number two is Elon Musk is going to step down as the chairman of Tesla. So if you go now, Google Tesla, you can see Elon Musk is the co-founder, is the leader on certain projects, but it's not the chairman anymore. And according to the settlement, Elon Musk cannot be the chairman of Tesla for at least 3 years. So that was back in 2018. So he has to wait at least 3 years, so means at least 2021. And the last point is Tesla has to monitor Elon Musk to make sure he doesn't publish certain Twitters just like that one to mislead certain investors, to make them believe something else is going to happen. So you would think this is just a little drama, right? We thought Tesla is going to be taken private at $420 per share. It didn't, so the price should just go back, right? Before this Twitter, it was at $360 per share and goes up to about 400 shares. So now it should probably slowly back down to $360, $370 per share. What happened in the end is Tesla's stock dropped way more than 360, dropped all the way to 260. Because in the investors' minds, they think, well, this is not true, right? You said it's going to be taken private, it didn't happen. Could there be something else that you promised us in the past? It didn't happen. So there could be some other bubbles at Tesla. So it dropped even more than the 360 original price, dropped all the way to 260. So roughly it's about a 30 to 40% haircut. So you started to see a trend there. Whenever there's a major public event, major public relations crisis, or a major scandal or major drama happening at the company, the stock tends to react by dropping a third to about a half. So taking a 30 to 50% haircut. Because that tends to be a psychological ratio. Investors tend to think, well, now it has dropped a third to a half, I feel safer now. So now I feel this company is worth at least this much. And the price stopped right there. So what we could see is whenever this happened, we ask ourselves, is this a crisis? But is this an opportunity at the same time? Because crisis and opportunity usually go hand in hand. So what we need to consider at that point is this really going to affect the company's value that much? Or it's simply an overreaction by investors? And by making that judgment, we can think about whether we should go in at this point, whether we should buy some of those stocks at that price point. Okay, we'll talk more about how to identify those opportunities during a crisis to really see whether that's a good point to go in. Because if you're going in at that point, at that price point, it can give you a huge returns, right? And this happened to some of the other companies too, such as Facebook, such as JD.com, right? So we'll probably talk more in our future episodes. Remember we said before Elon Musk's Twitter, Tesla stock price is about 360. Now remember this price, 360. Because earlier this year, jumping to 2020, early in March, I think around March 18th. So just a little bit before the darkest time of the US stock market, which is I think it's around March 24th, March 25th. Before that, March 18th, Tesla stock is about 360. So you see from 2018, it goes up and then slowly back down to 360. It's the same price, very interesting. At that time, I see a lot of friends, clients, buddies saying, should I buy Tesla? Should I buy Tesla at 360? Could it drop more? Because we have to put ourselves in, not in the current situation, but in the situation back 3-4 months ago, where the US stock market just had 2 or 3 circuit breaker, right? Dropping more than 7% a day. So at that point, should you buy Tesla, right? Some people say, yeah, I'm going to buy. Some people say, no, I'm not going to buy. And the rest is all history, right? Tesla price is now over 1,000, over 1,200. So the people who didn't buy feel like, I missed a huge opportunity. So now back to our topic today, which is responsible investing. We can see, right, using those 3 companies, 3 stocks, Volkswagen, British Petroleum, and Tesla, we could see if we don't do responsible investing, if we simply look at the company for its financial factors, but not caring about non-financial factors and ESG, right? Environmental, social, and governance effect. That could have a huge impact for the investors in terms of returns and risk because we're not getting at the true return and true risk. Okay, lastly, let's talk about the current situation for responsible investing, the trends we're seeing, and out of all assets under management, how much of it, what proportion of it is responsibly managed, responsibly invested assets. So right now, about 2/3 of the institutional asset management firms, when they are looking for investment partners and investment managers, when they're screening for those investment managers, they have already brought ESG standards and responsible investing standards into the questionnaires to those investing partners. So they're basically asking those partners, are you incorporating all those ESG responsible investing factor into your investment criteria and mandate? For example, our company, when we look for partners and investing teams, we look at whether or not they have responsible investing and ESG standards set up in their investment criteria as well. And to do this, one is to be responsible, right? It's to create that better future. But the other is to making sure when we're creating a diversified investment portfolio, we can achieve that steady returns for our clients and there's no surprise. And we're seeing more regulations for responsible investing as well. For example, for Ontario Pension Plan, when they are making investment decisions, they need to consider ESG and responsible investing, and they need to publicly say how we're looking at these factors. So out of all assets under management in Canada, roughly about 50% are responsibly invested assets. So that's pretty good, 50%. So about 2 trillion of assets are responsibly invested, responsibly managed assets. Globally, we have 40 trillion of assets that's responsibly invested. So Canada, out of the global proportion, is roughly about 5%. 5% is pretty good considering Canada's population and economic size. So Canada is definitely on the forefront of responsible investing. And these responsibly invested assets are going to be more in the future. They're going to grow even more. This is going to be the trend. Okay, last we'll share 2 interesting facts about responsible investing. Number 1 is millennials are going to be twice as likely to do responsible investing as their parents. And that probably comes to access to information and how quickly you can react to these information. Number 2 is males versus females. Females are more likely to do responsible investing, and they want their financial advisors, asset management partners, so those firms in charge of their finances and asset management to be knowledgeable on the topic of responsible investing and ESG as well. They definitely want to create that better future for all of us. Okay, that's it for today, guys. Hopefully you learned a little bit more about responsible investing. Do you think responsible investing is important? Are you going to do responsible investing from now on? Comment below. If you have any other questions relating to this topic or just investing in general, feel free to comment below. We'll try to get back to everyone in the comment sections. On our journey to financial freedom, we need to form some good habits. So why don't we start with the following 3 little habits. If you haven't subscribed, make sure you're subscribed to this channel so you will never miss another pie in the sky. Make sure you give this video a thumbs up and share with your friends, families, buddies, anyone you know that you probably talk about similar topics, investing, stock markets in the past. Money so tasty, retire so early. Until next time, remember, you're freer than you think.